Up next now, we're talking about our disruptor, and George Tsilis with us every single day, senior markets correspondent, taking a look here, NXP Semi. So the stock on the move, I see it up almost 3% after its report. What stood out to you in the numbers?
Well, I think when you look at the numbers for NXPI, obviously there was some challenges for their mixed controller semiconductors, analog and digital, because of the automotive space, which is actually about half of total revenues for NXPI. And the company did denote obviously some significant weakness in demand, and they still have some inventory challenges that they've been working through over the last year. But the other thing is they also talked about their mobile communications chipsets, which also, from a growth standpoint, was down about 25%, but they denoted strength in their other areas, which include the Internet of Things technologies, also their industrial chips, which were higher by about 14%. But overall, if you look at the print from the standpoint of earnings per share, they generated about 1.5% earnings growth. Compared to last year, they came in about 6 cents higher than the estimates at $3.24 versus $3.19 last year. And also, when you look at the sales, they were just fractionally higher because there was a lot of weakness in their major automotive division. Was higher only about 0.3%, but they basically came in line around $3.13 billion. Now, they also guided slightly higher for earnings next quarter with inline sales. Sales are estimated to be relatively flat compared to this quarter or sequentially at $3.13 billion. But the company did increase their EPS guidance from $3.14 to $3.20 per share. I think that's also providing a little bit of a lift. But I think if you look across the board for NXPI, obviously the stock's been performing rather well considering some of the challenges that have been going on in the automotive space. But at the same time, the company's valuation position and balance sheet is really strong, and they have been paying in the past year a dividend as well, about $4.06, and that's about 36% of their total earnings based on a trailing basis. But their earnings are expected to resume growth coming up in the next 2 quarters and going forward in the next 4 quarters. So over the next 6 quarters, it looks like the growth is resuming positive, and I think that speaks to why the trends are still moving higher for NXPI.
All right, so if the trends are still moving higher, now we want to know what your example trade might be.
Right. So I think if you look at the stock in the past week or so, obviously it's moving in conjunction with Tesla. But at the same time, NXPI does have exposure in other areas besides automotive, which I think is important, especially in the mobile telecom space, which if you consider Apple might be bottoming right now. So with that said, there's obviously the Fed meeting and some weakness that's potentially a continuation here in the market. So we can play it more safe from a bullish standpoint. What I'm going to do is I'm going to go out to June monthly contracts, and I'm essentially going to sell a higher probability option position or a put vertical by looking at selling the 250 put and then simultaneously buying the 240 put below that. So this is basically a put spread. And altogether, you can generate about $3.75 a share or $375 a contract. So the objective here is to obviously have the stock stay above the 250 because that's your max profit of $3.75 credit. But you have to keep in mind that the return on risk on this trade is pretty good. It's 58%, but there is risk, of course, you have to consider, which is about $6.25. That's if the stock hits 240 or lower by expiration. So it's the hold the line kind of trade, and effectively that short strike is where the risk is at 250, but it has essentially about a 62% probability of profits.
All right, George Tsilis, thank you for all of that. A good look at NXPI today, NXP Semi, for our disruptor. Thank you, George, every day.